Welcome to Trading Lounge and the Asian report for the 26th of March. However, I want to start with the S&P 500. And with the S&P 500, we've been looking at this here because we've got three waves up here. We've been looking at this as a corrective rally, as a wave B, and we've been looking for wave C down through here as wave 3 here, an A and a B and a C as an expanded flat. An expanded flat would take the top of wave 3 out and also take the low of wave A out and then make a new high in that case. We've got to be a little bit mindful because we've got 5 waves here. Then we could also look at an A and a B and a C here to the 61.8% retracement level roughly. And then if it was going to fail, then it would fail from that point and move down from that point. So we've worked down here, we've picked the low here, we've seen the turn, we've seen the money come in. The money, as I expected before, this is sovereign money, so we'll see how it goes, but I know that Australia has spent half of theirs. I don't know how the US is going. They just keep continuing to print money, as all sovereigns will, but we'll see how this rally goes. This is what it's all about here. And the reason I'm showing this for is because I wanted to show CBA here as well. Because CBA here, we can count wave 4 here, wave 1 and 2 here, and 3 here, and then an A and a B and a C. Here is an expanded flat. And yes, wave 4 has taken out the low at the top of wave 1 here somewhat. So that is an issue, but the same thing applies here. We've been looking at 5 waves down here. So we're either going to push up here in the 5th wave of the 5th wave here, or we'll just have a rally and then move down again from that point. Now, the CBA here had a really nice long push to the upside here, but when we look at the Australian banking sector and stocks like ANZ in the banking sector, they never went as high here. So let's just have a look at that for a moment. So this is, I'll just put it on the monthly chart here. This is the Australian banking sector, the XXJ, and we can see in this instance here that we've had this move down here. The high up here has only just taken the high out here, where CBA, it took the high, a long way out from that point. So there's a bit of a difference there. So in this case here, and this particular pattern here, this is a monthly chart here, we could look at this also as an expanded flat as well. We could look at this as the A wave down here, an A and a B and a C wave up here for the B wave, and then we'll look at 5 waves to the downside. Now I've drawn out A and Z, labeled the A and Z, so we can have a look at A and Z here. So it's the same thing here with A and Z. So we could look at wave A here, wave B here, and which makes sense, and then this has got 5 waves down, so we could look at this as wave 1 here, and this is an A wave here. This has got overlapping structures here, so it's a B wave here, and then 5 waves up for a C wave here for wave 2, which would make this wave 3 and this wave 4 and then this wave 5 coming down through here. So normally when you're looking at a 5-wave structure, just to give you an idea, the third of the third, the center of the third and third is pretty much the middle of the structure. So that's the middle of the structure here in terms of distance here, but also too, in a way, also time as well. Well, wave 4 can be, quite time consuming. And then wave 5 down for C. So really from this here, this is like, say, 2015 all the way over to beginning of 2000. So we're looking at sort of 4 years here with this 1 and ABC for 2 here. So I was thinking that, let's just say for a moment that this count is correct. Well, we would have like 4 years for this to play out down here with all of this here. Or some long period of time. So I think it's just a bit of an eye opener of how long this COVID-19 could kick in for. There will be rallies based on money being pumped into the system. There'll be money pumped into the system because of uh, a cure for it, and maybe not, and trials and all sorts of things that will make it bump around a little bit. So when we look at this here for the banking sector, we look at this as wave one here, an A and a B and a C for wave two here, and then wave three here. Then we still need wave four and five to come down. So wave four could take quite some time bumping along the bottom here for the banking sector. So anyway, I just thought that was a bit of a eye opener, and that would also make too. It would make well, then this here would also need more time to play out here. And we'll have to look at this as wave one here, an A and a B and a C here for wave two here. So this rally here is really important here. So if CBA is going to lead and lift the banks up with the S&P 500, it'll be all sort of, this is so critical here because it either puts us in a bear market for the next 3 or 4 years, while this gets resolved, or it gets resolved really quick somehow and we move up from that point. So yeah, it's it's a bit of a game changer, this current rally that we're in here. And this is the same for the S&P as well here, in that this correction here, it can rally to the 61.8% mark here, and then move down even lower here, or turn into some other type. All of this here from wave three here to some sort of wave four over here in terms of, maybe even some sort of triangle pattern here. We could have this down here as the first leg, back up to here, then here for this as an ABC, and then another ABC here and another ABC here for this, and then up from that point. So like just a really large sort of triangle thing playing out in this space here, that would take us for 3 or 4 years as well. So yeah, there's a lot to consider. That's all I'm saying at this stage. But look, as I always say, we trade what we know and we just go step by step. The rest of it's a bit of a guessing game to a point. So coming back to the ASX here, we can count 5 waves down through here. So we'll be looking for, at minimum, an A and a B and a C back up into this space here, say 6,000, just for sake of it at this stage. Or it could just push up straight up higher here and resolve itself. I don't have an answer for that. All I can do is I can start counting this little structure in here. We counted down low here. I think we did a reasonable job of getting the turn, and we're just looking for support on top of 5,000, and we can start to feed trades in. We talked about yesterday about feeding trades in, below the level and above the level and so on, and we'll look at that again here today. And this is the time to move in to get some sort of rally up here. Now there is a bit of a risk in this here. Most of the markets I've counted down here in 5 waves, which we can look at here on the 4-hour chart. So looking at it, 1 and 2 here, and 1 and 2 and 3 and 4 and 5, the third wave, fourth wave, 1, 2, 3, 4, 5 here. I kind of like this, and this tells me this price, all of this here is just running bearish here, but this one here, how it sort of, it's just its action at the end of the, in this 5th wave here tells me that it's slowing down and, it's preparing to turn. So this is what we were basically looking for. There's only one catch in this I see in terms of counting in 5 waves, is having this alternative count here, which is not such a bad count either, which is having wave 1 here and 2 here, then 1 and 2 and 3 and 4, and then 1, 2, 3, 4, 5, having a 3rd wave here, and the 4th wave would be at the 38.2% retracement level where it is now. So it could fail here and move down further from here. The reason this count doesn't work for me that well is because wave 4 here overlaps wave 1 here. So there is a problem with this count, but it just all goes back to working out if we're going to get support on this level here, and the support on this level here, normally we'd be looking for something like the arrival, the reaction, the first high above the level, and then an A and a B and a C here. And then we move up from that point. So that's kind of where we are at the moment with this. We're kind of, in here somewhere, about in here with this particular pattern here. And it may not pull all the way back down here as well, so we need to be mindful of that. So when we go long, we start building in long trades through here, which we talked about moving into this yesterday in different ways. We talked about it on the hourly chart and also on the 15-minute chart as well. So it's quite clear this is wave 1 here and 2 here, and then I was thinking this is 1 and 2 here, and I've changed this a little bit for wave 1 and 2 and 3 and 4 and 5 here for wave 3, wave 4. Wave 4 is a little bit small here, so I'm a bit worried about that. And then we're also looking for, when the cash market opens, of course, we're going to see a move up here to because it's already built into here. We'll see the banks jump higher. This move up through here, like I said before, we're just looking for the move up, and then we're looking for an A and a B and a C wave coming back down. And then we start to move in over this side over here. We'll look at that in a bit more detail here. You may already be long, and if you're already long, then you either need to take some profit at the end of the day today up here, or any time after 11:15. That most of the volume's in the market by 11 o'clock. If it's a big volume day, then 11:15. I'm not sure what the average price on the futures market is, the average volume. So let's say the average volume is say 50,000. Then what we could say is that half of the volume you would see in the morning, which would be 25,000, come in the morning session, and that's normally in by about, say, 11:15 or so. And then you look at that volume and you say to yourself, well, there's only 15,000 contracts that were traded, so it's a bit of a small volume day compared to the average. So then you'll know that it will drift down. If it was, the average volume is 25,000 contracts for the morning session, then and you get 30,000 in there or 35,000 in there, like more, well, then it's going to continue to drift, because normally through the lunch period you would see it move up in the morning session to 11:15, and then you would see it sort of drift for the day, and then come sort of 2:30 to 3 o'clock, then it would push back up again. But if the average volume on the futures market is higher, then the guys won't have this long lunch where their boys on the desk will peg it there. So it will just if it's high volume, then it's going to just continue to drift up through that 12 o'clock, 1 o'clock and 2 o'clock. So for you guys trading this as a CFD, you really need to know how many contracts are traded on the futures market as such. So anyway, just waffling on old days of trading futures. So on the 15-minute chart here, we talked yesterday about buying sort of pullbacks in here and so on. So yeah, this has still got to finish up here. To me, this is still the first high above the level here. We still need to get we still need to see a corrective move. We need this as 5 waves, and then we need a corrective move here, and then you can start just draw lines through the 2 tops here, and then you can move in from that point. The other point that I want to make too is that 5,000 is a major trading level, and then we've got 10, 20 and 30 here that make up group 1. Now today we'll see the market move up through group 1 here, through the top. But what I want to point out here, and I was just speaking about that futures volume there, that on top of group 1 here, which is the 300, if you get this pattern here, which we've already got the arrival and the reaction here, we still need to see one more move up here, and then the ABC here. So if you see that, and then you take this top out here if that's going to be the case. If we get support on top of 3, then the market's going to push up to 5. But if it finds support on top of 3 here, that means that it's leaving this number here. It's done with it. So this is the pattern that you want to see on top of group 1, the 300 here, and you want to be long from that point and then adding here, and then you'll also see a pattern occur here as well, the same sort of thing, probably a little bit bigger because 5 is a bit bigger than 3, and the same thing you can build in on that side. Because if it's just going to continue to trip up there and not pull back, and you're waiting for the pullback and it doesn't happen and it just keeps moving up here, you know, then you've missed out. But this is the solution. This is the answer. So it's on top of group 1, the number 3, the 300 in this case. If that becomes, you get this classic trading levels pattern sitting there, then you know that you need to go long from that point. It'll be like this here. So that's the 300 here. The arrival we already got. The reactions that we already have. When the stocks open, we'll see this push up, most likely, and then the pullback down through here. So you've got that level, that high, and that high to go long on. You may be able to get a better high over here. The same sort of, this whole pattern here will also be built into this little pattern here on this level here as well. So that's what you need to find in that instance. This is just the count. We'll just go back over the count a little bit. So we've got wave 1 and 2 here. Don't need to go into that. Then we've got this as wave 1 and 2. And yesterday we were going through this as 1 and 2 here. And all of this is 3 here, 4 here, and 5 here. I really don't like wave 4 here, I have to say, because it's smaller than this wave 4. So there's something not quite right about this. This could actually continue to move up. So be very mindful of that. Support on top of 5.3 there will have you there on that one. Okay, enough waffling on about all of that. Let's go in and have a look at Hong Kong. Also want to have a look at China here at the moment too, because we've been looking at China. This is the daily chart for the China A50. We've been looking at it as wave 1 and 2 here and down for 3 here. And that's okay, but also too, because we've actually just got 3 waves here in this case here, then we need to be mindful in case I've got it wrong, and we can just move up from that point. The point that I would have it wrong would be the point that it finds support on 13,000 here. So this would also be an early lead into what could be happening in that bullish mode in Australia and the US as well. Because if this, from that high to this low here, this is the 50 and the 61.8%. So if we get the same thing here, if we get, you know, support on this level here, that means taking out, you know, these highs here, then we know that we've got a bullish scenario, because support on here would see this market move higher here, and that means support here would take that top out, which would confirm that this is 3 waves here. So I don't know if that's the case, but when we get to here and it plays out here, that's going to give us an early lead into the situation. So we're either going to get to here and fail, and we'll see a much bigger bearish market at that point, or we're going to find support and we'll move up from that point. So this will be an early lead on, because it's closer to the 13,000. It will be close. It will probably be one of the markets that give us an early leading indicator compared to Australia or the US. So this will be quite critical here, and also that will play into Hong Kong as well. So with Hong Kong here, very much like the Australian banking sector in a way, the way that this is all moved through here, and I've got this as a bearish move here. So the same thing here goes again here as well. So if we get support on top of 25,000 here, then I'll know that the count that I've got here is wrong at this point. But otherwise, we'll just see this rally up as wave 4, and then we'll see it move down. So it'll basically fail a little bit higher here. So if I can just go to the hourly chart. Yeah, so this is the more bullish chart here. So we either move up to this high here. We're not going long here just yet. So once this little structure here is finished, we'll see an ABC pullback, and then we'll go long on top of the B wave. But this, copy this here, this can be that fourth wave in of minor degree here for this. So I need to, and that would play out here. I'd have this count as an A and a B and a C wave coming here. So I want this top to play out here first, okay? And then when we pull back, then we can look to get into it, because I need to know if I need to clarify things. I need to clarify that we're actually in a trend at this point. So that will just stay where it is. And also India, in the short time, we can trade long in this as well. So what we want to do here, we know that we've been working the 5 wave down for the low here. So how far this will go, we need to take it step by step. So in this particular instance here, I was looking at this being 1 and 2 and 3 and 4 and 5 here, ABC for 1 and 2 here, and then 1 and 2 here, 1, 2, 3, 4, 5 for the third wave, fourth wave, fifth wave here for the third wave, back for the fourth wave here, and I want the fifth wave to play out up here. Once that plays out, then we'll get the ABC. If we get 5 waves here, then we'll get another 5 waves over here. If you're going to go long now, and I would have said this yesterday as well, is that if you're going to go long now, keep the stop under the 61.8%. So that's why I have the 72 here, because I normally keep it under that, but for your purposes, the 78.6 would be safer. So wherever you go into the market and you're going in for a small position, obviously it's a long way away, but it depends if you're a scalper or a trend trader. I mean, everybody's trading different degrees of structure. So it's not really, when you were working with Elliott, you know, some people would say, I'll trade on a 5-minute chart or an hourly chart or 4-hour chart and all this sort of stuff. That's okay for mechanical kind of trading to a point, but when you're trading with Elliott here, you need to choose the degree of structure that you're trading. So are you trading these guys here? Or are you trading these guys here, or are you trading these guys here? You know, what degree of structure are you trading? And then you need to work your risk into that profile. And then you also need your patterns as well. And then, you know, you get your patterns, and then you can bring in the trading levels to refine it as well, and so on and so on. And you kind of use all of them, but you know, you be very clear from the outset what your risk capital is, and also the setups. You need to be very clear on the setups. You know my types of setups, which is this one here. So it's using Elliott Wave to get the direction, and then I use the patterns, and then I use the levels, and then that way I can narrow down where my stops should be, and that helps me with my risk. So okay, that's it. Thanks for tuning in. Cheers.
Report unless it's done.
Really?
Just holding up some flags.